last cycle is about those small companies, right? It's about the introduction of new technology. And so young platform-based companies, but that's not what I think is going to drive this next cycle. Next cycle, I think, is about late stage and actually commercial. Self-sustain.
The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 10th day of October, 2025. Some technical issues here, so we'll do our best to get through the broadcast. It appears that all this market activity we've seen, and because I have so many things running on this one machine, I guess I'm going to have to break out that new laptop that has 64 gigs of RAM. Because 32 gigs of RAM ain't cutting it today. Plus it has a faster chip, so it was bought for such a day as this. I just don't have it hooked up yet. Anyway, thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one is reserved for members only and those who are taking our 1-week free trial. If you've not taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. It'll take you 3 minutes. We'll get your indicators up and indicating today. Your trial will officially begin Sunday night at 6 p.m. Eastern. That's when we go to business. That's when we go to work. Not Monday morning. Sunday night, 6 p.m. Eastern. That's when the Globex markets open. And your trial will run from Sunday night all the way through next Friday afternoon at 5 p.m. Eastern. Now, you're not just getting access to the live training room. We actually treat you like you were already a member. We give you access to everything. For 5 consecutive trading days, no credit card required. Because at the end of the trial, we want you to be able to make a well-informed, intelligent decision as to whether or not trading is right for you. Again, when Michael joins us in about an hour, he'll walk you through step by step. Again, it'll take you 3 minutes to get signed up, and there's no credit card required. Don't even need your mother's maiden name. All right. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you get access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, on vacation, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But all you need to remember is youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. This is the schedule for each afternoon broadcast. So, for the last 10 days, we've been on a topic called Context Matters. If you missed it, you can always go to the YouTube channel and catch it. It's really important. Because often, we're all encouraged to read our Bible. You go to Sunday school, you go to church service, wherever you go that has anything to do with the things of God. We're building God's kingdom. Read your Bible, read your Bible, read your Bible. But it's important to understand what you're reading. It's important to understand the context in which those verses were written. One example of the topic we talked about yesterday, or day before, I think it was day before, slaves. Now, here in America, our context of slavery is what we saw at the beginning of this great nation. And that is a very negative connotation. It was a bad thing. People were hurt. Families were trapped. Families were separated. It was a horrific thing. But yet, Paul speaks positively in one of his letters about slavery in a positive context. And so that would be a real head scratcher if you didn't know the context in which it was written. Now remember, the New Testament, written in the first century, things were a lot different. Back then, the term slave did not have a negative connotation. In fact, it sort of meant what having a job means today. The outcasts of society in the first century were the peasants. Peasants dreamed of becoming a slave because that meant they had a house to live in, they had good food to eat, they were treated well, they were given an education, their children were educated. So, do you understand how context matters? Okay? Slavery as we know it, from our life experience and the experience of America, bad. First century, slavery good. Something people aspired to. So, the next time you read any scripture, make sure you understand the context. So we spent 10 days on that topic. Well, all good things come to an end. We begin a new topic today. All things together. Today's scripture is 2 Corinthians 3, verses 7 through 18. I'm going to share it with you from the Message translation. The government of death, its constitution, chiseled on stone tablets, had a dazzling inaugural. Moses' face as he delivered the tablets was so bright that day, even though it would fade soon enough, that the people of Israel could no more look right at him than stare directly into the sun. How much more dazzling then the government of living spirit. If the government of condemnation was impressive, how about this government of affirmation? Bright as that old government was, it would look downright dull alongside the new one. If that makeshift arrangement impressed us, how much more this brightly shining government installed for eternity. With that kind of hope to excite us, nothing holds us back. Unlike Moses, we have nothing to hide. Everything is out in the open with us. He wore a veil so the children of Israel wouldn't notice that the glory was fading away. And they didn't notice. They didn't notice it then, and they don't notice it now. Don't notice that there's nothing left behind that veil. Even today, when the proclamations of that old bankrupt government are read out, they can't see through it. Only Christ can get rid of the veil so they can see for themselves that there's nothing there. Whenever, though, they turn to face God, as Moses did, God removes the veil, and there they are, face to face. They suddenly recognize that God is a living, personal presence, not a piece of chiseled stone. And when God is personally present, a living spirit, that old constricting legislation is recognized as obsolete. We're free of it, all of us. Nothing between us and God. Our faces shining with the brightness of His face. And so we are transfigured, much like the Messiah. Our lives gradually becoming brighter and more beautiful as God enters our lives and we become like Him. Now, if you were thrown off there by the chiseled stone, if you recall, if you've read your Bible, Moses came down from the mountain carrying some tablets. That's the chiseled stone. And the constricting legislation, that's what was chiseled into the stone. So again, the topic that we'll be on now for the next 5 days, all things together. So for our first installment, becoming truly human. In 1,000 ways, glittering and dark, graceful and blundering, the human condition aches towards integration. We long for a happy fitting together of the bits and pieces of our humanity, for a mending of our many fractures, for an unnumbing and a reconnection. We reach for it in moments of resonance, in some experience of lust or power or being seem to make us feel all right. A hungering for happy endings courses through us, running far deeper into our soul strata than even our darkest cynical tendencies. And the dissonance of these longings and suspicions scrapes at us, keeps us restless, makes us homesick within our own homes, loaded with customized comforts, has us rattling about with anxiety. You know, one of the most prescribed medications out there is Xanax. Stuff does some weird things to your brain. It's a psychiatrist dole it out like candy. Highly addictive. Now, some people need it, and if that's what your doctor's recommended for you, you might talk with him about it, but I'm certainly not recommending that anyone go off medication that has been legally prescribed to you. If you're buying it on the street, I'm going to tell you stop now, because most of the street drugs have some amount of fentanyl mixed into them. And we know just one little grain of fentanyl too much can turn your lights out for good. And so we live in tension, wondering who we are to be, how we are to be, what we are to be, wondering why we are haunted by a ruthlessly elusive joy, why something always seems to be missing, why the good life is so hard to come by. All questions we ask, even when we don't know we are asking them. The way of flourishing in a fragmented world is found in apprenticeship to Jesus, in union with Him, the one who holds all things together. Colossians 1:17. A union that leads to abiding with Him and obeying Him, and results in imagining Him. 2 Corinthians 3:18. We all, with unveiled face, beholding the glory of the Lord, are being transformed into the same image, from one degree of glory to another. That is the central point I want to make in our 5 days on this topic. Apprenticeship to Jesus is the way of integration, a whole life way of apprehending and existing in this world. It is in Jesus that all the outward flying fragments find their place and cohere. Apprenticeship to Jesus is the way, the process of change by which image bearers of God become more like Jesus, the truly human one. So I'll leave you with this question to ponder over the weekend. Where in your own life do you feel the ache of fragmentation most deeply? And how might apprenticeship to Jesus invite wholeness in that place? Think about that over the weekend as it applies to you, to your life, to your home. Hold on one second and we'll pray. Heavenly Father, thank you for the new covenant of grace that shines brighter than the law that was written on stone. Remove the veil from our hearts so we may see your glory clearly. Transform us day by day into the image of Christ, from glory to glory, by the power of your Spirit. In Jesus' name, we believe and pray. And everybody said, Amen. Now I know everybody said I was crazy because I keep yammering about how one day the market's going to take a drop. This is just the beginning. We're only getting started. Here's the numbers from around the world. Let me refresh the data because it's changing quickly. So I want to give you the fresh. Currently the Dow down 534 points, a little over 1%. NASDAQ down 491 points. We talked yesterday about that probably being one of the first to tumble. It's down over 2%. S&P 500 down 102 points. That's a little over 1.5%. And the Russell 2000 down 40 points. That's a drop of well over 1.5%. In the commodity basket, crude oil down $2.52. Trading 58.99 last. That is a drop of over 4%. Gold up $36.40. Trading 4,009 last. That's a gain of almost 1%. Silver up 57 cents. Trading 47.73 last. That's a gain of 1.25%. In the Asian markets at the close, the Nikkei fell 491 points. Now, of course, the reason for the big sell-off, I'm sure you know already, is the comments made by Trump today about how he's about to drop the hammer on China via the tariffs. He said he's had enough of the nonsense, and he means business. That's why the markets freaked out this morning. Interestingly, though, the Asian markets, which opened at 8 o'clock last night and closed before Wall Street opened today, they haven't heard these comments yet. But the Nikkei dropped 491 points. Wonder what's going to happen to it Sunday night, Monday morning. So the Nikkei's down over 1% on the day. Shanghai down 36, almost 1%. The Hang Seng down 462. That's 1.75%. Now the European markets were open when the comments came out. London opens at 3 a.m. Eastern and closes at 11:30 a.m. Eastern. So European traders had a chance to hear the comments made about China. FTSE down 81 points at the close, almost 1%. The DAX down 369 points, 1.5%. The CAC down 123 points, again 1.5%. I think it's been a while since I said this. We had a red day in Asia. It was a red day for the UK. And it's a big red Radio Friday here in the US of A. But we're not surprised, right? I mean, if you tune in every day, this is the very thing we've been talking about. And this is just the beginning. This might not even be the real deal yet. We'll see how we close today before we render judgment on that. Now, if this doesn't aggravate you, I feel sorry for you. The 2025 Nobel Peace Prize, which President Obama got when he was actively involved in 2 wars, it was awarded this morning to Venezuelan opposition leader Maria Corina Machado for her pro-democracy work. Not to the guy who has brought peace, ending 8 wars since he took office earlier this year. So, well, that's not political. Oh, really? What is it? What is it? Venezuela's a dumpster fire. America's got the strongest economy it's ever had. Trump's put his foot down. We're no longer being taken advantage of with these crazy tariffs. We've always had a strong bark, but now we got a bite. So the announcement came after a public bid by the White House on behalf of President Trump for his role in working to resolve the 8 conflicts I mentioned. Multiple nominations in Trump's favor came after the committee's January 31st deadline. Okay. So the cutoff point was before he had a chance to end 8 wars. Okay. Well, there's always next year, right? What a joke. The Nobel Peace Prize. Now, some good news. A federal grand jury has indicted New York Attorney General Letitia James. And the crowd went wild yesterday on charges of bank fraud and making false statements to a financial institution. The charges stem from James' 2020 purchase of a home in Norfolk, Virginia. James stands accused of violating her mortgage contract by renting out the home instead of treating it as a secondary residence. A decision prosecutors say stands to save her about $19,000. That's going to be the most expensive $19,000 she ever made. James dismissed the allegations as baseless. It's all a matter of public record. She accuses Trump of retaliation after bringing a civil fraud case against him that has since been tossed. The big dollar short is turning into a pain trade for investors. Betting against the dollar has been the dominant trade this year in the $9.6 trillion a day foreign exchange market. But the wager is starting to stumble. Now, let me take a moment to point something out for those of you that might not know. All these Forex companies that sell you their software and their trades and all this other stuff, okay, they love to tout that $9.6 trillion a day that exchanges hands in the foreign exchange market. What they don't tell you is that over 80% of that $9.6 trillion is bank-to-bank transactions. Not something you, as a retail trader, have any hope of being able to participate in. Of all the people over all the years, the biggest complaints I've heard is not from stock traders, not from ETF traders, not from futures traders. It seems like the ones who suffer most from battered trader syndrome is the Forex market. The world's primary reserve currency, the US dollar, is around a 2-month high, even as the US government shutdown drags on, and traders in Asia and Europe say hedge funds are adding options bets that the rebound versus most major peers will extend into year-end. Overseas developments have been a key driver, with the euro and the yen falling abruptly this month. At the same time, comments from Federal Reserve officials urging caution around further interest rate cuts have boosted the dollar's appeal. The longer the strength persists, the more painful it is for those sticking with calls for the greenback to take another leg lower. Among the bears, Goldman Sachs, who on average has 3 losing trading days a year. JP Morgan Chase and Morgan Stanley. The trend, if it continues, could reverberate across the global economy. For example, making it harder for other central banks to ease monetary policy, pushing up the cost of commodities and increasing the burden of foreign borrowings in the currency. Let that sink in. Amazon is opening its largest fulfillment center in the Pacific Northwest and building another large e-commerce distribution center in Indiana. The new facility in Woodburn, Oregon, outside of Portland, covers 3.8 million square feet. That's until Antifa burns it down. Antifa will be patient, though. They'll let them build it first, then they'll burn it down. 4 times the size of the nearby international airport, and will store millions of products. Get them while they're hot. Yeah. According to KGW News and other local media outlets, it is outfitted with advanced scanners, conveyor technology, and robots that can automatically retrieve and sort inbound and outbound orders and deliver them wherever they're needed. Amazon plans to initially hire 3,000 people to run the facility. Now, for a little town like Woodburn, Oregon, what's the population of Woodburn, Oregon? Hang on. Population. Woodburn, Oregon. 30,000. There's 30,000 people living in Woodburn, Oregon. And Amazon's going to open a plant that will employ 10%. How many jobs did I say? Yeah, 3,000. So 10% of the population of this city, who probably already have jobs, will now be able to get a better, high-paying job with benefits. Or will Amazon do what they typically do and cap everybody at, 37 hours, 38 hours, so that they can't get benefits? In related news, the retail giant plans to build a large automated fulfillment center in Greenville, Indiana, to meet rising customer demand in the Indianapolis metropolitan area. Chain Store Age and Supply Chain Drive reported this news today. Amazon already operates 11 fulfillment and sortation centers in Indiana. I don't know how many they have around the world. There's one 5 miles from where I live, so sometimes we order something and it shows up the same day. Years ago, I ordered some part for my computer at like midnight on Saturday night. Sunday morning when we came home from church, it was already on the doorstep. Incredible. We already talked about this, but New York Attorney General Letitia James was indicted by a federal grand jury in Virginia, making her the second of President Donald Trump's perceived political enemies to be criminally charged in 2 weeks. Well, he knows a thing or two about lawfare, because they tried to destroy him for 4 years. And boy, they are ticked off, because not only were they unable to destroy him or bankrupt him or put him in jail, he became the next sitting president. Wish you the best, Tish. Look at your calendar. Columbus Day is back. President Trump on Thursday said to his cabinet, "We're back, Italians. We love the Italians." He said that as he signed a proclamation to honor Christopher Columbus on Columbus Day, to be celebrated on Monday. Banks will be closed, but markets will be open. Columbus obviously discovered the New World in 1492. We all remember that from elementary school when he sailed the ocean blue, right? He was a great Italian explorer. He sailed his 3 ships, the Nina, the Pinta, and Santa Maria. You remember that, right? It's kind of like Meshach, Shadrach, and Abednego. Across the Atlantic Ocean and landed in what is today the Caribbean. And this is a particularly important holiday for Italian Americans who celebrate the legacy of Christopher Columbus and the innovation and explorer zeal that he represented. I'd have an addition to Trump's statement. We're back, America. We're back. Secretary of Transportation Sean Duffy has restored to prominence a painting of Jesus Christ at the U.S. Merchant Marine Academy in Kings Point, New York, after it was demoted following a complaint about its Christian message. Jesus is out of the basement. I promised you I would restore faith by returning Christ on the water to its place of prominence where it belongs after being taken down under Biden and my predecessor. God is good for these mariners, true faithful American patriots. If you follow Duffy on X, you can read the post and you can see the picture. In fact, just go to X and search Secretary Sean Duffy. It'll pop up. You'll see the picture and you'll see all those proud mariners standing in front of it. America really is back. 20 living hostages are expected to be returned to their loved ones Monday or Tuesday after spending just over 2 years in captivity in Gaza. The remaining living hostages range in age from 20 to 48 and are all male. The 20 men were among the 251 individuals taken hostage during Hamas' October 7, 2023 attack on Israel that left 1,200 people dead, many little tiny babies. And I will not go into the horrific things they did to these babies as they killed them. The remains of the 28 deceased hostages still in Gaza are also expected to be released soon as part of the ceasefire deal Israel and Hamas reportedly agreed to Wednesday night. Yeah, it's kind of hard to put any faith or trust in anything they say till you see it happen. Remember, no one expected October 7th 2 years ago. But now no one will ever forget it. Every election season, mayors and governors step before cameras to boast that crime is down. Charts are waved, statistics are cited, and carefully crafted talking points are deployed to assure anxious citizens that their streets are safer than ever. Yet, when you leave the press conference and walk the sidewalks of Baltimore, Chicago, or Los Angeles, the reality feels far different. The gap between official numbers and lived experience is wide enough to swallow public trust whole. The reason for the disconnect is simple. Most crime never gets reported in the first place. The Baltimore Sun recently highlighted what criminologists have known for decades. About half of all crime in America isn't captured in police data. Burglaries are only reported 45% of the time. Simple assaults, 37%. Sexual assaults, a shameful 21%. Think about that for a moment. Nearly 4 out of 5 sexual assaults never reach the official record. Yet politicians still spin a sore story that safety is improving. Now, why aren't Americans calling the cops? Well, for many, it's because they believe the system won't deliver justice. Victims of property crimes often assume police won't recover stolen items. Domestic violence survivors fear financial ruin if their abuser is arrested. Immigrants worry that calling 911 might lead to a knock on the door from ICE. Cities like Baltimore, there's a deeply rooted stigma against snitching that makes reporting crimes socially dangerous. And for those who simply distrust the police, staying silent feels safer than engaging. So, the next time you hear the governor or the mayor of Chicago or Portland, Oregon, stand up and tell you how safe it is, or even show you this cherry-picked video of a nice peaceful tree-lined street. Make sure you take a look. And they're telling you on the news, oh, those other guys on that conservative channel, oh, they're showing you videos from 4 years ago. Really? So how did that independent investigative journalist get arrested when the Antifa mob beat him up, broke his camera? He got arrested. He was quickly released, and because he believes in the work he does, he went right back to the scene of the crime. And guess what? Now, some are going to call him stupid for this, but I don't. I call him courageous. He got beat up again and arrested again. Now, that's a matter of public record. I don't think that was from 4 years ago. Now, CBS says they're going to start playing a clean game, that they're going to actually report the truth from now on. I would love to see that happen. I really, really. But we get what we get. All right. Let's do Logic 247. That's our 24/7 around the clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. Over the last 375 weeks, we've issued over 20,600 individual handcrafted alerts. Sunday night, God willing, we will hit 20,700. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, 375 weeks, in case you don't know, that's a little over 7 years. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. She'll finalize it this afternoon after the markets close. I won't be adding any additional alerts. 53, that's more than 10 a day. So what happened this week? Since the markets opened this past Sunday night at 6 p.m. Eastern, we issued a total of 53 logic alerts. One never triggered. At the time of the recap, we were still waiting on the outcome of 15. That gave us 37 actionable alerts, of which 3 or 8% would have been stopped out, again based on simple market structure and a simple process we teach all of our passport holders. Every logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, and in most cases additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, the real purpose of the logic alerts is to help you learn how to read a chart. Until you learn how to read a chart, you're never going to really be a trader. It's that simple. I know you can read, but a chart has no words, no sentences, no paragraphs, no punctuation. It's a whole different language. Now, you can stumble around and struggle for however long it takes, or you can hire somebody to just teach you how to read the chart. It's a choice. How much time and treasure have you sunk so far? It's personal. You don't need to answer. I guess that's what they call rhetorical. Yeah. So 375 weeks, obviously that's a very long time. Just make sure you use, if you trade them, okay, great. You'll do fine. But make sure you use them to learn how to read the chart, okay? That's the reason they were created. Now, as I said, 375 weeks is a very long time. But long before there was a Logic 247, we had our original alert service, the concierge trade alerts. Now they're different. They're different in a number of different ways. But for the purpose of this discussion, I'll simply say they don't come out around the clock. They're published as a static report, typically 5 minutes ahead of the Globex open. So if you trade stocks, you think the Friday session began this morning at 9:30 a.m. Eastern. But if you trade futures, you understand that the Friday session began last night at 6 p.m. Eastern. All of our traders had all of these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude, NQ, gold, and silver. Now, Michael's going to be joining us in a few minutes here, so we won't make it through all the markets right away. When he comes, he'll give us a recap of the live training room. Then I will complete the recap, but we will go through each and every market in granular fashion. We'll start where we always do, with the daily chart of the bellwether, the S&P 500 Emini futures. And that's what we've been talking about. Now, again, we still don't know, is this the real deal? How we close the day will be very important. This morning in the live training room, I threw out a couple of areas for potential support. Right here is one of them. We're sitting right on top of it. We've bounced off of it a little bit. We've already traded through the BBC. Now, if you tune in every day, you hear me say the pullback holds more often than not. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did on April 24th, we're bullish and expect higher prices. Now, when I say price always reverts to the mean, as you can see, when price pulls back to the BBC, pullback holds more often than not. But eventually it will trade through like it did on April 23rd. And then the pullback held, and the pullback held, and the pullback held, and the pullback held. But wait, there's more. And then the pullback held. 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 The last pullback prior to today was September 25th. Now, notice here, we traded through the BBC. We actually closed below it. But the following day, look what happened. We popped right back above it. As long as the candles are touching, okay, that means it held. Let me show you how you know when it doesn't hold. Remember I said on April 24th, we crossed the BBC to the upside, but it was on the following day, the 25th, where we opened and closed above the BBC. That confirmed it. We've now gone from bearish to bullish. So we have to be patient here. Looks like the next target for potential support will be down here at the 0 line on these new fresh fib extensions that we drew right here. You see that right there? Okay. That's a big drop, man. Big drop. Pullback holds, and it 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 holds until it doesn't. So what happens the remainder of today? I mean, buyers could come in. They could see this level as good buying territory. They might. See, what's happening right now is institutional traders has simply hit pause on the buy side. Institutional traders are the ones that move price, not me and you. No. We just chum the water. we're their liquidity. That doesn't matter though, we still do okay. Now, by the close today, we could be back above the BBC. Or no matter where we close down here today, Sunday night when the Globex market opens at 6 p.m. Eastern, we could rush back up Sunday night, Monday, and get back above the BBC. And then we'll have another case of the pullback held. So we've definitely traded below it. Question is what happens with the next candle? Does it open and close below the BBC? If so, remember I've been talking about this 24% Fib retracement that we need to keep the bull healthy? Better a 38, better a 50, but not in one day, okay? We don't need another Black Monday, which this could be the precursor to that. It's not a forecast, just an observation. If it all happens in one day, people freak out, people get hurt, people jump out. Well, actually, on Wall Street, the windows don't open anymore. It's a true story. Just like high-rise hotel windows don't open anymore. So we'll keep an eye on it, see what happens. But it's very easy to see where the market is most likely to find support. Okay, we're at it right now. Okay, below of this candle. See, I was having this trouble this morning. Did it finally load? The low of this candle, 53 1/4. The low of this candle, I can't get it. Come on, light up. Yeah. Just, again, I'm running an i7 chip, 32 gigs of RAM, and it's slowing my computer down. All right, that's okay. Let's go to the 30-minute chart. This is where all of the alerts are created. The Logic 247 alerts and the Concierge trade alerts. The CTAs I just showed you, okay? These are them, okay? The vertical lines separate today, Friday, from yesterday, Thursday, back here's Wednesday, back here's Tuesday. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members since December 14th of 2009, over 15 and a half years. This was the open last night. By the second candle, we made it above the BBC. See, we had a leg and a retracement. That's how markets work. Okay, a leg and a retracement. And we had a leg and a retracement, a leg and a retracement, a leg. Now, the market right here, you see where the step on the way up, you had price, you had the black step line, you had balloon climbing, and all was well. Now, only one of three things happens when price encounters a weekly zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. The slice is when a 30-minute candle slices through a weekly zone like it's not even there. And when it runs out of steam, it retraces to the zone it sliced through and continues in the direction of the slice. Only one of three things. So, we get above the zone after consolidating, but the step line crosses to the right side of balloon climbing. Now, I've had people tell me they have a hard time understanding this concept. The black line is on the left side of the blue line. right? Black line on the left side of the blue line. Now which side of the blue line is the black line on? It's on the right side. There's only two sides, left side, right side, okay? When the step line crosses balloon climbing, we expect a retracement back to the BBC. And the pullback holds more often than not. So we catch a bounce, okay? And where does it take us? Right into this area here, where blue turned to red. So that sends us back down to the BBC. We consolidate at the zone again. Then we make a drop to the zone below. That was published this past Monday at 6:15 a.m. Eastern. We get them out early so that our traders have a chance to get them on their charts before Wall Street even wakes up for the week. Support always sends the market looking for resistance, which it found at the zone. When price drops to a zone, we expect support until proven otherwise. When it rallies up to a zone, we expect resistance until proven otherwise. So we get a pullback to the BBC, and guess what? The pullback holds. And off we go. This is the 9:30 opening candle on Wall Street. It rockets us right up to the long target. See, this is going to give me a pop-up like I normally get. It's not cooperating today. But as you can see, it overshot. Now look at the horizontal line on my cursor. See this area right here? That's an area where you would expect resistance. Okay. Now this target, where was it? What was it based on? The bearish cross. When the red line gets below the green line, that's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Now, this was the opening candle on Wall Street, so there's always a lot of excitement. So we spiked, but we came back to the candle closed where? Right at the bearish cross. It's right there. I show you this again and again, over and over, day after day. So we get this spike, okay, but we fail to take out this high. That right there, the high from yesterday, we failed to take it out. That's a sign of weakness. So down comes price through the zone, through the zone, through the short target, and then we hit this zone, and we catch a really hefty bounce. Better than 10 points, or about 10 points. And then we continue down. There's more blood in the streets. Come on down. And we put in a low. I'm going to pass it to you in a second, Michael. My computer's acting very sluggish. But as you can see, guys, where has the market found support so far? At this week's lowest weekly trading zone. So far. We could go lower, but we expect price to be at or above the lowest zone, or at or below the highest zone by close of business on Friday. So do we keep falling or not? On the daily chart, the next major area for potential support is down at 66.18. So there's a chance we may close below that lowest weekly trading zone. So we'll pick up where we left off. See, we're finding support. It's trying to build a long candle there at the lowest zone. See, there we go. There comes the green.
Some green.
Yep. Okay, so Michael will give us a recap of what happened in the live training room, and when I come back, we will continue with the recap of the CTAs in granular fashion, and then we'll wrap things up for the week with our good word for the day.
All right. So.
All right. Looks good.
Okay. Let me start out with this, and then I'll get into everything else I don't want to get into. All right. Good afternoon, everyone. Today is Friday, the 10th day. The 10th day of October 2025. Now, if you've not taken a free trial with us, go to mytradingiq.com, click on the purple button right here. There's no credit card required for this trial. Just click on that purple button and it will bring you to, not this page. Did I update it? Nope. Let me refresh it. Here we go. It'll bring you to, not that page. Oops, not that page. Hang on. Let's go in here. In here. Let's put a fresh one up like that. There we go. It will bring you to this page where all that we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. Okay. If you yeah, if you give us that TradingView login ID, then we'll be able to enable the indicators for you and get them indicating on your desktop, which is where you want to be. If you're going to bother taking the trial, get the indicators. Okay. Okay. So today we were back and forth. We had 7 stop outs today out of 31 trades. We did get the goal early though. So if you can read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, we, just like yesterday, we got the goal in 3 minutes and 2 trades, and we're at $1,000 a contract at that time. Yesterday we did it on the YM, I think, right? Yeah, yesterday we did it with the YM. Today we did it with the ES. We ended up taking a total of 31 trades this morning. We had 7 stop outs in those 31 trades. So on the NQ today, we're -9 ticks. On the YM, we're +25. So on the NQ, our high for the day on the NQ was actually 12 ticks. We didn't have a ton of NQ trades today. I didn't take a ton. The YM, 25 was the high for the day. Gold, we're at 26 is what we ended with, but the high for the day on gold was actually 58. It was more than double that. In the ES, we ended with +18, and that was the high for the day on the ES. Okay. Yeah. Okay. Yeah, that's right. I got a 30 tick trade right at the end. When the market started going crazy, I had 1 short trade. I got us 30 ticks on the ES. Okay, and that was it. So we ended up with $565 per contract this morning. Now, let me move this over here. Deadly blast rips through military explosives facility in Tennessee. So on the month, we are now at $8,377 over 8 trading days, averaging $1,047 per contract per 2-hour trading day. On the year, we're now at $210,295 over 176 trading days, averaging $1,194 per contract per 2-hour trading day on the year. Now, I want to get that number back up over 1,200 if I can, but we're doing great here with the values being over 1,200 up until, well, we had 3 days this week that didn't make it. So we'll keep doing what we do. Following the 24/20 blueprint, so far this year, you would have only had to work 24.5 hours and be up $152,247 if you quit trading when you got the goal for the day and you did everything exactly like I did. Right? You'd be averaging $6,214 per hour in that span of time. All right, let's get into the trades. I didn't have a ton of trades today, so hopefully I'll be able to get into all of them. I did manage to do something else that was fairly significant, I think. And we'll talk about it more in next week's partners meeting, but I think I have all my stops going to break even automatically now on Sierra. Turned out to be a really simple thing, but we'll get into it here in a few minutes. Okay, as far as the trades go on the gold today, gold started out awesome. Everything started out great this morning. You know, we were up like $450 a contract after like 3 minutes, 4 minutes, something like that, 10 minutes maybe. I guess I got to control back. There's going to be a whole bunch of bars here on the gold. So, wow, there's a lot of bars. Look at them all. All these markets are going to have a ton of bars with the chaos that just ensued an hour ago. I'm not going to go through every bar that triggered during the break. Okay, I'm not going to go through every bar that triggered for that matter. I'm going to go through every trade that I took, and that's what I'm going to call it. All right. So on the gold, the first trade we took was right here. We were at +5. Then next trade we got 25 ticks. That put us up to 30. Then we got 10 more. That put us up to 40. And right there, we're still within 3 minutes of starting. We're up to 40 ticks on the gold. The next one we took about 10 minutes later, and we had another 4 on that one, and then another 7 on that one. and then we didn't take any more for a little while, but all in the first half an hour. We're up to 51 ticks on the gold alone. That's $510 a contract in the first half an hour. And if I could have stopped there, I probably would have stopped there, but I couldn't. Now I took a trade right here, and I have this as an orange because I don't know why I took the trade. It wasn't a valid trade. But I took it and I stopped out. Now somewhere in here there's something missing. We went from 51 up to 58 up to 56, and then we had to stop out. That brought us down to 41. Then we had to break even and another stop out that brought us down to 26. Oops. We had that one there too. And let me just go through what I had in here. I had, oh, I know what that was. That was a tiny stop out. That's why it's that color. It was a 2-tick stop out because I had screwed it up. So we went from 58. So we went from 51 up to 58, and then went from 58 down to 56. Then we had a break even. Then went from 56 down to 41. Then went from 41 a break even, then down to 26, and that is where we ended up with gold. And then I wasn't trading it, but the chaos began somewhere right in here. And so I didn't trade gold at all anymore after that. Right? I'm not even going to try to go through everything that happened because it's just way too many bars. Way too many bars in there. So that was gold. Right now, the gold is pretty tradable right now. It's still got a spread. It's got a 2-tick spread in it. Okay, but it is pretty tradable. Now, the 2-tick spread doesn't help much if you have the thing set to automatic to move your stop to break even, like I do. Because with a 2-tick spread, you're going to be 2 ticks out automatically as soon as you get into a trade. Like this is giving an up close right here for the long, right? And and it's already gone enough to bump my stop to break even. But I'm not even sure. Okay, it just did automatically bump my stop to break even. I'm going to lock in 10 ticks on that. I think I got 8. I went to lock in 10. I think I got 8. Let me just put that down. I had 1 trade right there. I'm going to make that a green arrow. Okay, just to differentiate. So on the YM today, we had, well, we're back and forth a bit on the YM. I'm going to have to use the control back button again because there were so many bars today. It's just going to take a while to get back there. And wow. All right. Does anybody have any questions at this point? Here's the YM back to the beginning of the day. So our first trade on the YM was here was a break even. Next was a +10, then a +5. So we're at 15 at that point. Excuse me. Then we stopped out, brought us back down to 0. Then I got a 17 right there. And then I stopped out, brought me down to 2. Then I got a +3 that brought me to 5. And then it got crazy. Somewhere in here, there was, after the +3 that got me to 5, there was one trade in there that got me 20 ticks and got me up to 25. I don't know where that one is, but it could be right here. This was probably it right here that got me up to 20. 20 ticks right there. And as you can see, the markets went a little crazy. And so we stopped looking at them in that spot. It's got a trade right here on a down close, okay, on the down close right there. And that stopped. It just went to break even automatically. Lock in 1 tick on that. And we're out with 1 tick, maybe. Depends how much slippage I got. But we see how quickly it's happening. And there was still spread. And so just put one of these here. So we've got a little bit on the gold. We've got a little bit on the YM. And now the ES. Now the ES, in the chaos, we did actually trade the ES once, I think. Or +30 ticks. It was shortly after it started that I saw it just gave the setup that we're always looking for, where it crosses the midpoint, closes down over the midpoint. But you can see there are a ton of bars in here. So it looks like it was there at around 10:50, 10:58, 10:59, something like that. Hang on, I have not. And while you're in here and typing stuff in Jim C, the other Jim C wants to know if you can have a quick talk with me. Okay, so here we are right now on the ES. We started out here on the ES with +8. This is where we got the goal for the day on the ES, was this one right here, +8. And then promptly after that, we stopped up. That put us at -2. Then where is it? Oh, come on, it's in here somewhere. Then we stopped out again. That put us at -12. Do I have it on here? No, I don't. Okay, well then we stopped out again and it put us at -12. And I think it was probably right here where we stopped out again. And that put us at -12. All right. And then when the markets went crazy, I took a trade. I thought I had marked it. I took one trade and it immediately gave me 30 ticks. Immediately gave me 30 ticks because that's where my target was. I think it was right here. Right here this morning. No, everything was moving around so fast, so it looked like it closed on or below the midpoint, but it was moving around really fast. Is it that one? No, it was this one. It was the next bar over. There it was. It immediately gave me 30 ticks. Oh, no, it was this one here. Okay. It wasn't this one. One of those. But it gave me the 30 ticks, and that is where I stopped trading the ES. Okay, I thought I had marked it. So let's go all the way to the end, and we'll see what we have going on right now. Okay, right now, we don't have anything right here. We broke through the midpoint, and we're down here. Now it's going to get into the overbought, and then down to the oversold, and come out of it again. All right, so this was something that was in the partners meeting last night, kind of. The question was, can you take another trade in here? If it doesn't go all the way into the overbought and it pulls back again, can you try to take the trade again? And the answer is no. When it comes out of the oversold, it's got to go into the overbought before you can take another one coming out of the oversold. Okay. Remember, the idea is that we want to enter here and continue up through here. If it doesn't continue up through there, that means it didn't get into the overbought. So it doesn't continue the trend. So you don't want to take this one right here when it pulls back again, because the chances are you're going to be in chop or it's going to continue down like it did right here. Okay. That was one of the questions from the meeting last night. But for right now, we don't have any trades in here. So let me go here and there. And that was that. Now on the NQ's got like a good jillion bars. So I'm going to scroll back on that, and that's going to take a minute. All right. Wow, look at all those bars. I think scrolling as fast as it can right now. So the NQ was all over the place. You know, we couldn't trade it at all. It's still all over the place. It's got no liquidity in it right now.
The TV commercial used to say, when E.F. Hutton speaks, the world listens. Now it's when Trump speaks.
Yes. E.F. Hutton. I've heard that in a long time.
Interestingly, Trump didn't make those remarks until this morning, but the Asian markets, all of them tanked big time overnight.
Things that make you go. All right. So on the NQ this morning, we started out here with a break even. Now we didn't have a ton of NQ trades today. The next one we picked up 4 ticks, and we picked up 8 ticks. That got us to 12. And we stopped out. We had a break even. Then we stopped out, and that put us at minus 13. And then we had a plus 4, and that put us at minus 9. And that was it. And you can see this is when the markets went nuts right here. Nuts. And it was just a whole load of crazy right there. So we just go all the way to the end because there's no sense in even looking at that. And I'm not going to trade it right now. This is what it looks like. There's a spread. There's no liquidity. If I try to trade 10 contracts, it's going to spread it over like 6 levels. So I'm not going to do that. Right. Yes, I think I may just be happy.
However, you could trade 10 micro NQs.
Is micro
it would be
more liquid right now?
It would be, yeah, it usually is.
It usually is. It usually is more liquid, but I just don't really like.
I don't have a chart up right now, but I'm going to guess it is.
Well, let me just bring up let me see if I have a micro. I don't think I have a micro NQ to open. I know I had a micro ES. Here it is. This looks like a micro NQ down. It's on the U contract. Okay, I haven't used that in a while. You can see. Let me change that to a Z contract. The Z contract on this guy. Here it is. Oh, you know what? I think that'll show it, right? Yeah, it does. Okay. It shows liquidity. Okay. So it's still got a little bit of a spread, but this is what the regular NQ contract looks like, and this is what the micro NQ contract looks like.
It's typically much more liquid, but it's really not today with all that's going on, I guess.
Yeah, I thought it would be. I thought usually it's 1/10 the price, so usually there's a lot more liquidity.
It's like
in it.
10 times more liquidity. Yeah,
it is. Yep. But today,
I think people are afraid to do anything right now.
Me too, since I'm up already on the day. I think I like ending that way, especially before the weekend. Yeah. The one thing I did do, this week, Dwayne's probably already gone over this, but I just want to bring it out here. Now, we've been saying since this thing, you see the big blue arrows? I drew those in there when we were talking about this. We were talking about this yesterday afternoon. That was the bearish engulfing candle. That says get ready for a big down move. Now, you don't know what's going to cause that big down move. We don't know. We didn't know this was going to happen. But when you get a big one of those things, BBC right here is what you anticipate it's going to get down to. And it did. It's gone right through it, and it's gone right through it a couple times. Like this one right here at the end of the day today. At the end of the day today, I would say would be an opportune time to buy call options. I mean, you could also buy the micro, but you have downside risk over the weekend on the micro. But you could buy call options. Your risk is limited to the to the price of the option. Okay.
Or do the micros.
Or do the micros. Now with the micros, the risk is limited to where you put your stop. But if you put it on over the weekend, your stop could get jumped. Say when the markets open back up on Sunday.
Yeah.
So that's got a little bit. It's got a little more undefined risk. With the option right now, the option would be a defined risk, but it's got the expiration date. You're paying for the time, and that time's going to expire whenever you choose the expiration date. The micros, you don't have to worry about the expiration, but you do have to worry about that downside risk.
I did explain to you guys the other day on this broadcast when we had that bearish engulfing candle, because it was bearish engulfing during the point that we were having the broadcast on that day. And I said, guys, this is the single strongest candlestick reversal signal there is, as long as it's in the right context. So a bearish engulfing has to be after an extended uptrend, which we've been in since April 24th. So everything qualified. The only thing that was unusual about this one is that there was a delayed reaction to it happening, but it happened nonetheless. So
there it is, and we got a big move down right there. Big move down. And again, today, I would
Now,
say
if
if
you
you were to
go,
buy call options, go
if
ahead.
you go over, Michael, to go to the about maybe kind of the middle of the chart, see where you got that red candle right there. You went right to it. Now, what could
Yes.
happen, guys, is we could close down below that ribbon today, but then Sunday night the markets could open and they could spring right back up. And we always say the pullback holds more often than it doesn't. And so that pullback that Michael's pointing at, it held because both
And
candles are
guys,
touching the ribbon or the BVC.
and this was the same scenario. This was a Friday, and this was a Sunday.
Oh, okay. It's good to know.
August 1st, August 4th. So it was the same scenario.
Mm-hmm.
It's, I mean, it's like a carbon copy. You could,
Yeah.
I'm gonna suggest that something's gonna happen over the weekend that's gonna make the next candle be a green candle that's gonna erase this loss, or most of this loss, anyway, half of it probably. Last one did almost the whole candle right there. See,
And then we continued higher for months.
Yep, for months after that. So it like shakes it up and then it comes back.
Now that last down move was a big 2-day down move. The one you were just pointing at.
Yeah,
See the
this
day
one here,
prior.
there
Yeah.
to there. Yep.
Yeah.
Yeah, I don't remember what happened on that. Was the 31st to the 1st?
I don't remember either what caused that to happen. If anything in particular, I'm sure there was. I'm sure the guys on TV found something to blame it on. So
Yeah, ask Kramer. Kramer probably said it was going to
Kramer.
go up right here. He probably said right here, buy, buy, buy. That's probably what happened.
my heart dropped in my stomach the other day when Kramer said, "You know, guys, I think you should buy Bitcoin to hedge everything else you own." I was like, "Oh man, why did you have to curse us like that?"
Yeah. Yeah, I was thinking of that.
Because back when it was at like 70,000, he was saying sells. He was hitting his little button, sell, sell, sell. You know. Thanks, Kramer.
Yeah.
He's one of the greatest stand-up comedians of all time.
Well, he's a good.
Oh, he's a moneymaker. He has high ratings. Yeah. Higher than Jimmy Kimmel.
Yeah, well, that's it, Bob.
think
Just do the opposite of what he says.
I
He's
think-
giving you great information. It's just,
I think Kimmel's family's the only one that tunes in anymore.
he thinks he's pretty special, though.
Oh,
All right,
he does.
So
yeah.
this is what Bitcoin. This is what Bitcoin did. It came all the way down here, and Bitcoin right now is at the ribbon, right at the BBC right now. So it's at a point where it should bounce too. Now it doesn't always bounce when it hits the ribbon, but Bitcoin's down today. I know, my little XRP is down pretty good. So that that's okay. Oops. That's okay. It's
That was a nano XRP. Was that what you meant to click on?
I didn't mean to. No, I didn't mean to do that. I meant to XRP exclamation point is really what I want to do. Let me just put that in myself. Just type it. Oops. Why did that not work?
I think you got to just go XRP. And
here, see me. There it is.
there we go. Okay.
Oh, XRP one exclamation. That's
So, yeah, is this a daily? Yeah, so it sold off, but it sold off yesterday as well.
Yeah, it's been a couple of days sell off. I'm not really too concerned about it. The majority of it I bought when it was 50 cents.
Dogecoin ran up to a quarter, I think, yesterday. I'm sure it's off again today. I'm sure it's off today along with everything else.
Probably. So
gold and silver seem to be holding strong. But go ahead.
Yeah, silver went over 50. I thought I read. So last week in the partners meeting when I drew this stuff, I said this is what I think it's going to do. I think it's going to pull back, and I didn't actually draw the pullback deep enough in here, but I said I think it's going to go up to here. Then we're going to have a pullback. Then it's going to go up to here. Then we're going to have a pullback. Then it's going to go up to here. And so that's probably going to take a couple of weeks to happen. So we're 1 week into it right now. It's probably going to take 3 weeks. So this will probably be the end of the month. That's what I put it out to, the end of the month. So we'll see. We'll see if it all comes together, but that would be healthy. It's if it doesn't go too much lower right here, then it would be healthy. that we have this retracement and we have a slow climb back up. For the market, anyway, be healthy. It's not for everybody's bank, everybody's brokerage accounts, but that's the kind of progress you want to see in the market. If it just whips around, you're not going to be able to make any money with that. All right. Well, it is 126.5.
In a whippy market, you do have one option, and that is increase the time frame, whether you're using time-based charts or range-based charts. Like on that NQ, I mean, it would really straighten it out if you jump to like a 50 range or even 100 range.
Go to 100. Here's the 100 right here.
Yeah. It kind of takes the whip right out of it.
And all that chaos started right over here at just before 11 o'clock is when it started, right in here. Before 11 o'clock is when it started. And if you were doing the 100, it had a trade right there that would have been really close to stopping you out. It had a trade right there that would have worked. It had a trade right there that would have worked. It had a trade right there. Depends when you move your stop to break even. Might have been a stop out. Then going forward, it had a long trade right there that would have worked. It had a long trade right there.
Now, keep in mind, each one of those candles is 100 ticks.
It is 100 ticks on each one of these candles.
It takes 5 ticks or 4 ticks to make a point.
Right, 25 points in each candle.
$5 per tick. So each candle's worth $500.
And that would have been a good one right there. This would have been a good one right there. This would have been a good one right there. This would have been a good one right there. So there's a lot of opportunity on a much larger time frame. Okay. But alas, I kept it on the 19 range. I just didn't want to trade it because there's so much spread. On a larger time frame, your stop's going to be 125 ticks.
My computer started to bog down, so I guess I'm going to have to break out the new machine with the 64 gigs of RAM and the faster chip. I'm still running an i7 with 32 gigs.
By the time you break that out, it's going to be old.
But at least it has
another new one.
And I'm going to have to do it because they're going to stop supporting. This month, you'll
10,
stop getting security updates for Windows 10, which means all the hackers in the world are going to be trying to figure ways to break into Windows 10 operating systems. So, and this particular machine that I use to run the mothership, when I tried to go to Windows 11, it says your hardware. There's something. Now, I read in one of these do-it-yourself forums that there's a way to go in and change something in your registry, which you should be very careful changing anything in your registry. But you can change something in your registry that, if that's the problem, it will override and it'll go ahead and accept Windows 11. So I may, once I back everything up off this computer, before I switch to the new computer, I need to start getting all the software installed on that computer anyway. So
yeah.
Well, but my I wonder where I'll find, because I still use DT Pro for all my charting and all my alerts and everything. You can't execute on it, but you can chart with it. I'm just wondering. I'm going to need to find an installation file.
I have one.
Oh, yeah, if you could drop that off to me in Telegram, that'd be great.
Yep, I can give you one.
Then I can get that installed on the new laptop with 64 gigs of RAM. Wow,
that's more than I have on this one.
I never even knew. That was the first time I ever heard of a computer with that much RAM. Oh, and I got those AI glasses. Did I tell you about those? Right?
Oh, did you? You told me. Yeah, you were talking about them.
But... Yeah, I packaged them up to send them back because they didn't translate anything. And then I found tucked in the bottom of in the box, this little thing that says you got to download an app from the App Store called EarDance. Well, ByteDance and Skydance, they're the companies behind TikTok. and I don't allow that on my machines. So now I've got the dilemma of, am I willing to put ear dance on my phone, giving it access to all my banking information or any personal information? So I haven't done it yet, but I mean, just your phone will do translation. Little D, he's got some earbuds. They do the new Apple earbuds. They do live real-time translation.
Really?
Yeah.
That
And
is
even your
interesting.
iPhone, it has a translator on it. It comes factory installed, but it doesn't speak it out loud. It's when somebody says something to you in Chinese, it just types it out on the screen in text. But I'm sure there's other translation apps you can download in the App Store that will actually speak it out.
Yes, there
That
are
maybe
a lot
don't
of
have
apps
dance on the end of the
in there.
name.
Doesn't mean it's not made in China.
Yeah, I know. Yeah. But
But
the Byte Dance, I mean, that is directly linked to the CCP, the Chinese Communist Party. Oh, and that lithium deposit in Nevada, turns out that is LAC.
really?
And there was that comment in the live training room this morning that there's a new technology for batteries that won't require lithium. So I did some research during the break, and there is a salt something technology that they're working on, but it's not going to completely negate the need for lithium. There will still be a need for lithium, and this new technology is relatively, well, new. So, but I found one of the companies that is working on those salt based, whatever it is. It's 17 cents a share.
Wow.
I mean, that's
That's where Bitcoin was once.
well, yeah. I mean, would I rather buy, would I rather spend $1,000 on that if I had it, or put $1,000 on the roulette table? I think I'd buy the stock. I mean, at 34 cents, you double your money, you sell half, and you got a free ride, whatever happens over the next 5, 10, 15, 20 years,
Yeah. It's one of those things you just actually you could actually get the stock certificate and just stick it in the safe and forget about it and come back.
Keep in
Maybe it'd be
mind
worth a
that
lot more.
doesn't getting the stock certificate, if it makes you $1 million, I'm just going to go on the record and say, take the $1 million. Don't sit there and watch it go to zero, because now that stock certificate, if I run out of Sherman, well, I guess I could use it for that. So
Yeah.
anyway, back to you.
All right,
We've
back
run
to
over.
me. Yeah, we went over a little bit, but while you were talking, I took a 4-tick trade on the ES and a 10-tick trade on the gold. But let me just say this. I still have one of my first stock certificates. I don't have the certificate anymore. I lost that, but that's
You can get it reissued.
Yeah, I don't think so. It's for a publicer. Maybe, I don't know. I don't know if the company still exists.
Well, if they got bought out by another company, then the shares you owned in that company that got bought, it's still valid. Yeah. A lot of people find old stock certificates, like in their grandma's attic or something, and they go on the internet and they go, "Oh, that company doesn't even exist anymore." But if you do a little deeper research, well, yeah, that's because that company was bought out 50 years ago by Boeing. Oh, wow. And so, in fact, I know a guy who actively buys old stock certificates in hopes of bankrupt companies or whatever, in hopes that someone will come along and pick up the pieces and rebuild. So it's sort of his hobby. Like some people collect postage stamps, he collects stock certificates. So. That's the only guarantee that you own a stock, guys, is if you actually can hold the certificate in your hand. Otherwise, it's just numbers in a computer somewhere. So
I used to have them all in this binder in my dad's attic. And he's long since sold the house. So
you no longer have the binder?
no, I don't have the binder anymore.
Oh, yeah, that's a bummer.
Yeah. Anyway.
All right.
All right, so here we go. If you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. If you take the trial now, you have it over the weekend, and that would be great. You have that extra time. There's no credit card required. It brings you to this page. Just fill it out. Okay, we finished the session today. $565 per contract. We took 31 trades. We stopped out 7 times. It took 3 minutes and 2 trades to get the goal for the day. That's it. On the month now, we're up 8,377, and on the year, we're up 210,295. Okay, with one contract. Each one of those is with one contract. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready. He's right there.
Yep.
Great.
I know you just said it, but recap of the morning session.
Well, let's see. 3 minutes, 2 trades, $1,000 with 10 contracts.
Good job.
Yes.
All right, guys, we had a lot of news today, so we're just getting going with, there's that bounce off this week's lowest weekly trading zone on the ES, and the step line starting to hook to the right. Once it gets on the right side of red and falling, we should expect a retracement back to the BBC. So since we're just getting started, we'll look at the daily again. Okay. Now, on the daily, we've come down through the BBC. Michael was just showing you this a little earlier. See, we closed below on a Friday, and then on a Sunday night, and which began the Monday session, we ended back right where we were. So the pullback held. Pullback held, the pullback held, the pullback held, and it 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 held. We don't know yet. We won't know until Monday if this one holds. Here's how you know whether it holds or not. It's really quite simple. Back on April 24th, when we traded above the BBC and closed, that's stage 1. Stage 2 came the following day on April 25th, when we opened and closed above the BBC. So we went from bearish to bullish based on this confirmation candle right here. And that pullback held, and that pullback held, and that one, 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 and all the other ones that I showed you. Now, while the pullback holds more often than not, we know that eventually it's gonna trade through like we saw on April 24th and 25th. We won't know the outcome of this pullback till the close of the session really on Monday. I mean, it could close down here real ugly, and then Sunday night we could even drop a little more, but then Wall Street opens Monday morning and buyers, institutional buyers decide to be brave and courageous. It could drive it back up above. If, however, we do close below the BBC today, and the Sunday night, Monday session, we open and close below the BBC, that's when you need to strap in, because it may be a wild ride to the downside. I want to see a 50% retracement, but I want to see it in a measured move. Leg retracement, leg retracement, leg retracement, leg retracement. I don't want to see it all happen in one day. I don't want another Black Monday. Okay. And this will be the third day that I've asked this question. If you still trade individual stocks, maybe you got stocks you've been holding on to for years, ask yourself this question. Whether it's a $100 stock or a $1,000 stock or $50 stock. If Monday it went to $1, would you keep it or sell it? If the answer is you would sell it, then I'm going to suggest that you sell it today. Okay. Now today's a bad day to sell anything but I gave you this warning 2 days. This is the third day in a row that I've issued this warning. Okay. So while this looks bad, trust me, it can get a whole lot worse. Now the index will never go to zero because they're always reshuffling the deck. Getting the weak out, bringing the strong in. That's why I can't understand why anyone trades in individual stocks anymore, when you can just buy the index fund, feed it on a weekly, monthly basis, however you can, based on how you get your money, where it comes from. But you need a long investment horizon. Okay, this is something a 20-year-old man should do, or a 30-year-old man. The older you get, the more aggressive you have to get. But as a young man, you've got time on your side. $1,000 investment over 40 years with a 10% return, an average 10% return annually on an S&P index fund. $1 million bucks. True story. Do the math. Okay. All alerts are created on the 30-minute chart. This is the 30-minute chart. Now, these are the CTAs that I showed everyone earlier, but I know some of you were not tuned in earlier, so I'll show them to you again. Here we go. Now, these long and short targets that you're going to see on all of these charts, all of our members, all of our traders had these targets 5 minutes before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ gold, and silver. The Logic 247 alerts can come out around the clock anytime, but the CTAs are published as a static report shortly before the Globex open each evening. Okay, so as you see these drawn on the chart, just remember all of our traders, and that could be you. All you got to do is email Valerie. They had them 5 minutes before the open. So with that tad bit of information in mind, look at where we opened last night. Now, what do I always tell you? When you got a lot of blue and climbing, chasing price, that is when price is most likely to trade through the BBC. The pullback holds more often than it doesn't, but eventually it trades through. Now, obviously on a 30-minute chart, it's going to trade through more often than it trades through on the daily. Okay. So we run up to the weekly zone, and only one of three things happens when price encounters a weekly zone. 70% of the time, it's this: consolidation, consolidation, consolidation. 20% of the time, it's this: rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When it runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. It's only one of three things that can happen. So, this high that we put in last night, okay, see this high right here from yesterday? See that? There you go. That's what's called market structure. Now, also the step line, the black step line, as you can see, it's clearly on the left side of the blue and climbing. There's only two sides, the left side and the right side. It's on the left side on the way up, but right there at approximately 9 o'clock last night, the step line crossed over, not to the dark side, but just to the right side of blue and climbing. When the step line crosses blue and climbing, we expect a retracement to the BBC. Same thing is true when the step line crosses red and falling, like it did over here. We expect a retracement to the BBC. It happens over and over again and again. So we get some consolidation, okay? And then we actually get above red and falling for one candle, and we run into these highs right here, right where you should be expecting resistance. So we go back to the BBC and the zone and continue consolidating. And then right here, we catch a drop to the zone. Now the vertical lines separate today, Friday. Over here is Thursday, Wednesday, Tuesday. The horizontal lines are the weekly trading zones that are published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zone since December 14th of 2009. And you know what's changed in all that time? Absolutely nothing. Nothing. So, we get support at the zone, which is what we expect till proven otherwise. And then we get resistance at the zone, which is what we expect till proven otherwise. And then here comes the 9:30 Wall Street Open. This candle, yeah, that one right there. See down at the bottom, it says 9:30. Okay, this was the Wall Street Open, this candle right here. Over here, you have a bearish cross. That's where the red line gets below the green line. When you have a bearish cross that leads to an extended move like this, the first time price revisits that area will almost always be good resistance. Now, there's a lot of exuberance the first 30 minutes, so we did run up to here. And this is important. Remember, this was a green candle all the way up, but we failed to take out this high right here from yesterday. That's a sign of weakness. And then look where this 30-minute candle closed. At 9:59.59. Right at the bearish cross. Resistance. The next candle tried to move higher, but that was short-lived. And then when this candle opened, it ran right up to the long target and then reversed off that bearish cross. And that was the beginning of this. We found some support at the zone 47/48. It bounced us up to 57, 58. Basically a 10-point bounce. Okay. This red wick all the way down and then a bounce. And then the next candle. That's where the real damage got done. And we traded through this zone. And where did the market find support? This week's lowest weekly trading zone, which was published Monday morning at 6:15 a.m. Eastern for all of our traders. Again, we've published the zones every week since December 14th of 2009. Uncanny, right? Yeah. Yeah, it is. Moving on. The Dow. Here's where we opened last night. Okay, we got blue and climbing, chasing price. So we have a leg. Now this zone is 46,495/46,500. The low of this candle is 507. Okay, so we missed it by 7 ticks. Support. Support sends us to resistance. We consolidate for hours at the BBC. And then, prior to the Wall Street Open, this is the 9 o'clock candle. We run from the BBC up to and through the long target. You only need 20 points to get your goal for the day. Okay. Then we pushed up through the next zone. And right over here, you had a bearish cross. Okay. So there was some exuberance here. I mean, look where this candle closed after running all the way up. It spiked the bearish cross by just a little bit. Then it collapsed and found support at the top of the long target. We see this almost every day. From there, we bounce up to the zone resistance. We get a retracement, and then we run up to the zone again. This was a green candle, more than enough to get your goal for the day right there. Okay. And then that candle reversed, became a red candle, and overshot the zone, the slice. When a 30-minute candle slices through a zone like it's not even there, when it runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. Now, you're probably wondering, did we get to the lowest weekly zone on the Dow? Nope. We still could, but notice that the step line coming down, the black step line, it's definitely on the left side of red and falling. Somebody questioned me about this. They go, I can't get it through my head, the concept of the step line being on the left side or the right side of red and falling or blue and climbing. Okay, black line, red and falling. Now, if you're left-handed, this is the left side. If you're right-handed, this is the left side. Okay. Now, notice how the step line's starting to angle. Okay. That's because we're consolidating in this area. Once the step line crosses to the right side of red and falling, you should expect a retracement back to the BBC. Now the same thing happens with red and falling. Okay, see how the step line crossed red and falling? What do we get? Pull back to the BBC. It's just how it works. Over and over, day after day. The NQ. This was the open last night, and by the second candle, we had hit the long target. Now this, let's say you weren't able to get in right at the opening candle. Maybe you were 30 minutes late to the table. We opened at 299, we'll call it 300. We ran up 19 points at $20 a point. That one candle is worth $380 per contract traded. Okay. Then we got a little bit above the long target. And if you look left, is this an area where you should have been expecting potential resistance? You tell me. The step line crosses blue and climbing, and what happens? Price comes back to the BBC. Pullback holds. We attempt higher, and we get basically a double top with this candle right here. That sends us back to the BBC. Then we put in a lower high. Okay. Now we spike the zone, but notice both candles are touching the zone, so the zone held. Get above the BBC, we get a pullback, the zone holds, and then we get this high here. Now, this high, you see where blue turned to red yesterday? Here's your high, right there. I'm telling you, if you just learn how to read the chart, learn how to read these humble, simple indicators, you don't need anything else. So from here, Down we go. We hit the short target. We hit the zone from Monday morning. And we bounce from 125 up to 195. That's about 70 points at $20 a point. That wick right there. See, it was a red candle all the way down, found support at the zone, and bounced up $1,400 per contract traded. Then this candle opened, and down to the zone, there's another $1,400 per contract traded. But it continued, and it continued. But the lowest zone, I'm not going to rule out that we could see it today. Depends on what kind of damage control the White House does potentially based on Trump's comments today. I think he means business. So now, step line. It's on the left side of red and falling, right? Now it's directly below red and falling. Okay, that's step one. Step two is when it actually crosses to the right side of red and falling. As long as you know the difference between the left and the right, you're fine, okay? If it crosses to the right side, then we're going to expect a retracement back to the BBC, which just so happens to be at a weekly zone. And that weekly zone, this is Friday, Thursday, Wednesday. Wednesday, we saw lots of support at that zone. Here, here, here. Okay. Now that would be quite the rally. In fact, the step line could cross today, and we might not see the rally back up until Sunday night. We may not see a rally back up anytime soon. Nobody knows what's going to happen next in the market. I don't care what those emails you get say. See this high right here? Learn to read the chart. Learn to understand the indicators. Again, you just don't need anything else. So we've covered all the indices, the ES, the Dow, the Russell, the NQ. Crude oil. Crude oil falling on hard times. Here's where we opened last night. Okay, yesterday into the close, we had a leg down. So what do we expect? A retracement. Well, price always reverts to the mean, and the pullback holds more often than not. There it is. Right there. See it? Pullback held. So then we get another leg, and we find support at the zone. Remember, when price drops to a zone, we expect support until proven otherwise. Okay. So we bounce off the zone and run into the VBC, and the pullback holds and pushes us back down to the zone through the next zone. Now again, we slice the zone, but as we ran out of steam, look what happened. Price retraced right back to the zone. You see that? So resistance will send the market looking for support. Where did it find support? At the zone below. And then we got a very nice bounce from 60.45 up to roughly 60.65. It's a $200 per contract traded bounce. But we ran into resistance at the step line in red and falling. That resistance pushed us down to the next zone where we did some wide-ranging consolidation. This is an interesting candle. It ran all the way up to the zone overhead and then closed right at the zone. Uncanny, I know. Now the step line has crossed red and falling. We should be looking for a retracement, but I would venture to say that today we don't have normal market conditions for a lot of reasons, not just the tough talk on China. Okay, but that's still what you should be expecting. The zone is 58.55/58.60. The low of this candle is 58.70. So we missed the zone by 10 ticks so far. But all the indications are in. Now, if price does begin to move higher, there's potential resistance right here. And then there's nothing in the way of it getting back to the zone. But remember, for price to rise, it requires financial commitment. For price to fall, all it takes is for the institutional traders to hit pause on the buy side. Nobody has to put up any money. But what will happen is when the hedge funds who specialize in short selling see that the institutional buyers have hit pause on the buy side, that means they have no resistance. So they'll come out of the woodwork and they'll short everything in sight until the institutional buyers wake up and start buying again. It's almost like free money. But we all know there's nothing free, right? Except salvation. Now the step line is directly below. If price trades through red and falling, that would be unusual. You could expect support at the low of this candle, and then you got the zone. This is the lowest weekly zone this week for crude oil. Gold, wild ride on gold today. Here's the opening candle last night. Got blue and climbing chasing price. Now look at the huge leg we had down yesterday. See that? That's a huge leg. You could actually call it a leg and a retracement and a leg. Then you get a retracement back to the B. Price always reverts to the mean. Pull back hill. And it sent price right down to the short target. We spiked the short target, but we failed to take out the lows of yesterday. So there's hope. Back we go to the BBC, the pullback holds. Then red and falling turns to blue and climbing, and that gets us above the BBC and takes us up to a spot where I probably would not have called for resistance at that particular. It's obviously an important price, important area, because if you look across, you'll see here, and then you'll see over here. Okay, so it's definitely an important price, important area, but because of the big candle here, I tend to ignore this stuff over here. And you can only absorb so much. Okay, so from here we come back to the BBC, pull back holes, and off we go, all the way up to the long target and the highest weekly trading zone for gold. Now, this was Thursday, this was Wednesday. We were way above the highest weekly trading zone. But on Wednesday and yesterday, I said on this broadcast, I said, by close of business on Friday, we expect price to be at or below the highest weekly trading zone. That's how it's worked 99% of the time since December 14th of 2009. So we did hit that zone today and spiked it just a little bit. And then we dropped to the BBC. Now right here you got one candle that's not touching the BBC. That could lead you to think lower prices are coming, and they very well may be, okay? Because price right now is sitting on top of the BBC. It's got red and falling overhead. But not a lot of red and falling, okay? Now typically when equities drop, everyone looks for the safe haven investment, which historically has been gold. So we'll see what happens. I mean, gold is well off its lows more so than the equities, but gold fell Gold fell ahead of the news this morning from President Trump. Should you watch the news and then go to your charts? Or should you watch your charts and then go to the news to find out why whatever happened just happened? Charts are going to give you the information first. Last but not least, silver. So we opened last night, we ran up to the BBC, and we dropped all the way to the short target in one candle. Then we ran up to the zone overhead, consolidated, dropped to this zone, found support, ran up to the BBC. We got blue and climbing. It took us through the zone all the way up to the long target. And then the zone. And we hit that zone 1, 2, 3 times. Now a lot happens inside a 30-minute candle, so we may have hit it. Just looking at it from the 30-minute perspective. 1, 2, 3. Then we come down through the BBC, down through the zone, and at 46.95, the zone published Monday morning. We've now bounced up to the current price, 47.33. We got red and falling overhead. So you got potential resistance here, potential resistance here, 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 and then right here, you got a bearish cross. So if price were to trade through the BBC, be aware of potential resistance here and here. And if price takes out that high, then it should get a run right up to the long target, possibly even the zone. Just don't know if buyers are committed enough. We'll know more Monday. S&P still falling. Now, this low right here, we've traded below it, but the question is, do we close below it? Now, this is the zero line on the fib extensions, which are different from the fib retracements. Since the April 24th bull run began, we've not seen a 24% Fibonacci retracement. That would put the ES down at 63.70. That's 400 points lower than where we are now. A 50% drop is not out of the question. However, don't sell out of fear, okay? Make a well-informed, intelligent decision. Talk with your licensed investment professional. They know what you got. They know what you hold. And it's what they do for a living. And they may tell you to take your profits or take some of your profit. You know, an old adage in the world of trading and investing is simply, if you buy something for $1 and it goes to $2, sell half of it at $2. Now you only have half as much, but it's a free position because you just got all your money back. Remember, you paid $1, it went to $2, so you sold half. Now your position is only half as big, but you got no money. You got no skin in the game. You can lead a stress-free life. So if you still trade equities, individual equities, which is a dangerous game, look for opportunities where there could be a potential double. But here's the thing. When something doubles, it usually doesn't stay there very long. So you better have some kind of alert, some kind of alarm that says, hey, when this puppy gets to $2 or $20 or $200, whatever the case is, let me know. Or you can just put in a trade to liquidate. You know, if it's a stock, you can just go ahead and place an order to sell when price gets to $2 or whatever price gives you the double. So then you don't have to worry about it. The computer will just do the job for you. Technology is a wonderful thing when it works. Unless it's the Antichrist. If you have not read that Tucker Carlson podcast about AI, I've posted it twice now on the Breeze channel. Just go to wherever you get your podcasts. Go to the Tucker Carlson channel. It's free. And I think you got to scroll back to, I think it's last Friday. Now, this guy that he's talking to is not some nut job conspiracy theorist. He mixes and mingles with the biggest and the best out in Silicon Valley. And the Silicon Valley people, the ones who think they created AI, they're the ones who are the most worried and concerned. That they may have done something they can't undo. So, I know you can find an hour over the weekend. I'm sure you're using AI anyway. If you just do a simple Google search these days, you get that AI overview. You don't even have to have a particular client like ChatGPT. But he talks about these clients like ChatGPT. Men building hosts for the spirit, the Antichrist, to live in. Now, I know that sounds like totally whacked out. Oh my gosh, you fell for that? Well, you listen to it. Listen to the whole thing without any distractions. And then pray. Pray hard. Trade safe. To become a member, it's pretty simple. Email Valerie, support@cfrn.net. Let her know you want to become a member. She'll send you the information you need to get signed up. Once you're all signed up, she'll then send you a ton of information. Some of it you won't even know what to do with. It's okay. Create a folder in your email client. And every email she sends you, put it in that folder. Because as your learning journey begins, you're going to need all that stuff. And you'll learn what it is as time goes on. But the last thing you want to happen is you're working in the middle of the night because you can't sleep, or it's the middle of the weekend or a holiday, and you need some of that information, but you don't know where it is. If you put every one of her emails in that folder, you'll know where it is. All right? When you become a member, once you're official, a passport holder, as we call it, you're going to get 2 hours of live training every trading day. It's an interactive environment. On top of the 2 hours of live training every day, you get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Now, you see us dealing primarily with futures, but our strategy and indicators work on stocks, futures, crypto, Forex, ETFs, because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's just how markets work. And this is why it's so important that you learn how to read a chart properly, so that you know where to expect resistance, so that you know where to expect support. The Logic 247 alerts, which you will receive around the clock as a passport holder, not only are they wonderful trading vehicles, but more importantly, Used properly, they will teach you how to read the chart. Now, you can stumble around, grope around in the darkness for years, trying to learn how to read the chart. Or you can pay somebody to teach you. It's up to you. Ball's in your court. As a passport holder, you'll also get the concierge trade alerts every evening, typically 5 minutes ahead of the Globex Open. This Sunday night, if some things happen over the weekend that I think might cause an ginormous gap in any of the markets Sunday night, I'll put a note in the Telegram discussion group letting you know that I'm going to hold off on releasing the CTAs. But if it's pretty much a quiet weekend, then the CTAs will come out Sunday night at 5:55 p.m. Eastern, God willing. As a passport holder, every Monday morning you'll get the weekly trading zones. Published them since December 14th of 2009. You get them Monday mornings at 6:15 a.m. Eastern, so you have plenty of time to get them on your chart before Wall Street wakes up for the week. Every Thursday night, you'll be able to attend the members-only workshop at 8 p.m. Eastern. We had a great workshop last night. And last but not least, you get the golden keys that open all the private channels in Telegram, including that workshop channel, because we record every members-only workshop. So when you become a member, you'll have access to that channel where we've dutifully uploaded every video of every workshop for many years. I have no idea how many are in there, but there's a whole lot. Do you need to watch them all? No. But typically when Valerie uploads them, she'll put a little synopsis below it of the major things we spoke about. So if you're trying to figure out how to set up your DOM on Sierra or something, you can scroll through there till you see one of the videos and the bullet points underneath discussed setting up Sierra DOM. Get the idea? Yeah, it's pretty simple. So it's everything a trader needs, all under one roof. How much? One low price. $5,000. I'm always, these companies that bury their price, you got to watch video after video, and you got to have an online meeting with somebody, you know. Man, you know that they're going to highball the heck out of you when they finally reveal the price. At $5,000 is nothing. Most of you that have been trying to learn how to trade have spent years and tens upon tens of thousands of dollars for a bunch of empty promises and hot air. We're here every trading day. Every trading day. Live training every day. Around the clock support via Telegram. So if you're actually serious about learning how to trade, I mean, if that's what you want to do for a living, you're willing to show up every day, do the work, learn to read the chart, learn to read the indicator. If you're willing to put in the work, the money, that's secondary. $5,000, that's chump change. Okay. Ask yourself, more important than the money, are you willing to show up daily, pay attention, ask lots of questions, and actually learn? If you can answer yes to that question, that's when you should email Valerie, support@cfrn.net, and let her know you're ready to go. She'll send you everything you need. All right. Let's wrap up this week with our good word for today. Communication that works at home. Speaking the truth in love, we will become mature. That's Ephesians 4:15. Virginia Satter, a founder of Family Systems Therapy, determined that most families have 5 styles of communication. 1. Some members are placaters. They go along to get along and reduce stress by saying what others want to hear that makes them less upset. Number 2, others are blamers. Finger pointers, nitpickers, spinners of exquisite theories, eager to prove that they're right and you're wrong. And by accepting the blame, you vindicate and empower them. Number 3, this author, Virginia Satter, or not an author, but therapist, describes other family members as super reasonable. Their motto is, always agree with what other people say and conceal your real feelings. It's how they prevent getting hurt. They talk from their head and not their heart, redirecting the conversation toward things that are safe. Number 4, other family members opt for irrelevance, deflecting the conversation away from uncomfortable and potentially threatening topics. They talk only about what's unrelated to whatever's going on. And number 5, the final communication style is congruous or consistent. Congruous people tell it like it is. No disguising feelings, no double talk, no pretending. If they're angry, they own their anger. They own their anger. They say they're angry. They may even look angry. But they're straight shooters. They have credibility. You can understand and believe them. No topics have to be dodged, and no questions avoided. Anything and everything can be discussed, and everyone's opinion is respected. Ralph Waldo Emerson once said, "Nothing astonishes men and women so much as common sense and plain dealing." And it's a scriptural, truth-based communication style that works. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.